Should I? Can I roll the intro? Good morning. My name is Ian Joseph, market analyst at HFM, and welcome to today's morning market call. Today's a special day, it being the last Friday of the trading month, whereby we've had a lot of activities in the financial marketplace, and we want to see how we are going to conclude this month and prepare for the next one. A quick disclaimer before we do begin: the information herein is only meant for educational purposes. None of it should be construed as investment advice. Trading the financial markets do carry a degree of risk, and I'm here to help you maneuver the tough markets. Starting off with, where HFM website, whereby the economic calendar is usually number one, key number one. Whenever you wake up in the morning, always look at the economic calendar, look at the data. We are trying to generate ideas of what should we be looking at in the marketplace. Let me zoom in my website so that you can look into this piece of information. Now, today is going to be very active, especially in the Eurozone. Starting off with Germany. Germany did release their retail sales, and we are going to look into the data. We do have data for France, which has just been released, and looking at it currently at the moment, the consumer price index has actually come out lesser than anticipated. Consumer spending has come out lesser than anticipated. Looking at Spain also has come out lesser than anticipated. Today is going to be very active. Looking at the euro, euro is taking the center stage of the closing day of the monthly candlestick. Now, looking at Italy, also we are anticipating news in the next 1 hour 56 minutes. When you look at Greece, also we do anticipate data from them. Then later on in the day, in the next 4 hours 56 minutes, we do have harmonized index of consumer prices. This is for Germany once again. Later on in the day during New York Open at exactly 15:30, this is going to be Nairobi time. We do anticipate data for the United States of America, whereby we do anticipate the personal consumption expenditures. But the highlight is going to be the Michigan consumer sentiment. This is usually a forward-looking indicator, and we are going to talk about it in just a moment. Then, before the day does end, we are going to have an update on the commitment of traders. But starting off to the top, then looking at retail sales, what has happened in terms of retail sales in the Germany region? Now, import prices have actually fallen down in July 2025, actually negative 1.4% of July 2025. Now, this is on the same month than a year earlier, negative negative 0.4 once again on the previous month. Now, export prices have increased by 0.6% compared to the previous month a year earlier, and negative 0.2% on the previous month. Now, import prices were 1.4% lower in July of 2025 than July 2024, compared with the same month a year earlier. The rate of change in June 2025 was also negative 1.4 and negative 1.1% respectively. Now, the Federal Statistic Office, which is the people in charge of releasing this information to us, further reports that import prices in July 2025 were down 0.4%. And this has an impact because when you're looking at the tariffs that we have been anticipating in the marketplace, especially with Trump coming into office and enacting these tariffs earlier on this year, we did know that it was going to affect prices, but we didn't know by which magnitude. And we are seeing it have an effect in the marketplace currently at the moment. Yes, Europeans are coming back onto the table to discuss trade deals with the United States of America. But remember, once again, this cost of doing business will be passed on to the consumers, which will have an effect on the prices of the euro. And we shall look into the euro chart in just a moment. But export prices were 0.6% higher in July of 2025 than in July 2024. Looking at the graph, we did have a peak towards the end of August 2022, the charts have been in a rapid decline, and this is quite interesting. When you're looking at Europe are net exporters, meaning they are going to export much more than they import. But remember, they do require other goods and services from other countries. Now, this is going to have an impact because it means that, okay, they were used to import quite heavily, but currently at the moment, it's not as much as we anticipated. And looking at energy had the biggest impact on the year-on-year decline in import prices. Now, compared with July 2024, at negative 12.5%, which is quite astonishing, again had the biggest impact on the overall development prices in July. Did have compared with June 2025, crude oil had the biggest hit, negative 22.7, hard coal, negative 17.9, and mineral oil products, negative 12.9, were less expensive than in July 2024. Now, the year on year decreases were also recorded for natural gas. By contrast, electricity was more expensive than in the same month a year earlier at plus 30%. Quite interesting. Now, the prices of natural gas, negative 4.7%, hard coal, crude oil were down also a month on month, whereas electricity cost considerably more at 37%. Wow. Compared with the previous month. Now, mineral oil products were 1.6% more expensive than in June 2025 when energy prices are excluded. Now, this is why we usually get two releases in terms of most of the data in the financial marketplace, whereby they're going to exclude the volatile elements. Let's say, for example, on this particular case, energy, we did see quite a spike in the energy prices in the previous month. If only crude oil and mineral products are not considered, the import price index was 0.3% below the level of July 2024 and 0.4% lower than 2025. Now, this is very important because looking at it from a seasonality point of view, Europeans do consume a lot of energy, and we are heading into winter in the next few months. Now, this is going to have an impact because when it gets cold, there's going to be a higher demand for energy. And looking at prices currently at the moment, it has started to spike, and we are asking ourselves, could there be more where this came from? Now, this comes at a critical time because there are negotiations between essentially US trying to broker a deal between President Vladimir Putin and Zelensky, whereby we do anticipate there could be a ceasefire in the near future. Now, Russia do export almost 20% of energy into Europe. If there's going to be a deal that will be brokered, this means that the energy prices could actually come down because right now, the moment there are still sanctions against Russia in terms of you are fighting wars and we cannot give you money. Yes, you'll give us products, but we cannot give you money because this money will be taken into war. It will be taken to harm other people. So currently, at the moment, could a deal between the two nations remove the sanctions and energy prices would move over to the lower side? Only one way to find out. Now, lower prices also registered for intermediate and capital goods. The import prices were 1.5% lower than in the same month of the previous year, while the import prices of capital goods were down 0.5% year on year. Now, consumer goods and agricultural continue to see price increase. Very interesting because Europeans are very good in terms of agriculture. Yeah? Now, the prices of imported consumer goods, durable and non-durables, were 1.6% higher than a year earlier, but 0.4% lower than the previous month. Imported non-durable goods were 2.3% more expensive than in July 2024. And we can say that this is as a result of the tariffs, because when you're looking at Europeans, basically these economies, they do trade together, and looking at goods and services moving into the United States, there is going to be an impact, whereas where they are going to be tariffed more, which means the higher prices usually will be passed on down to the consumers. And on this particular case, we are looking at the retail. Now, the retails are going to be the consumers are going to be hit more in terms of their wallet. This could have an impact on prices of the currency in the near future. Now, in the case of non-durable consumer goods, food prices in particularly were marked higher, so 9.4% higher than in July 2024. However, prices were down 0.3% from June of 2025. Compared with July 2024, higher prices recorded particularly for orange juice, which accounted for a plus 41.6%, coffee roasted or decaffeinated plus 35.5%, beef plus 30%, shelled hazelnuts plus 29.4%, poultry plus 27.5, chocolate and sugar confectionery plus 26. Wow, quite interesting. Apple juice plus 24.6%, and milk products plus 10.6. In the case of confectionery, the increase was mainly attributed to higher prices of chocolate and other confectionery. By contrast, sugar and olive oil were less expensive than in the month a year earlier. Now, 30% is quite astonishing, because if I was buying something at a dollar, this means that I'm going to pay actually 30% more, which is quite interesting looking at this data. And we're asking ourselves, how is this going to have an impact on prices of the euro in the near future? Now, the biggest influence on year development of export prices coming from consumer and capital goods. Now, remember, once again, Europeans are really good in terms of manufacturing. When you look at especially Germany do produce the best, one of the best automotive vehicles in that we have seen, including Mercedes, including BMW, and so on and so forth. So if they do export more, it means that the people who are working in these factories are going to get much more better pay, which reflects into much more money in the economy being circulated in terms of expenditure. Remember, consumer spending accounts for a majority of overall economic activity. If they are exporting, it means that okay, things are doing good. Now, the exported consumer goods were 1.7% more expensive than in July 2024, while prices remained unchanged with June 2025. Now, the prices for non-durable consumer goods were 1.8% higher than a year earlier, and durable goods cost 1.6% more than in July 2024. Food was more expensive on average than in the same month of the previous year, plus 6%. Quite interesting, in particularly coffee. And we do know Europeans do love coffee, and coffee is going to cost more for these people. Now, higher than in July at more than almost 3% in June 2025. Now, exported capital goods cost 0.5% more in July of 2024, but they cost 0.3% lesser than last month. Quite interesting. Now, indices of foreign trade prices are calculated excluding taxes and customs duties. Now, this is going to be the import prices. At the same time, we did have retail sales, which was also down 1.5% in real terms compared to the previous month. Now, this is the official data that was released, and retail sales of July 2025. This is preliminary, calendar, and seasonally adjusted. Okay. So we do have the preliminary and then we have the revised. Okay. So for the prelim, we did have, and this one tends to have the much more impact, has a higher impact because it's usually released earlier, whereby negative 1.5% compared to the previous month on real, negative 1.0 compared to the previous month on nominal, plus 1.9% compared to the same month last year, plus 3.1% compared to the same month last year. Now, if I go back to my economic calendar on the HFM website, as you can see, we were having a consensus of 2.6. Actually, the data came out lesser at 1.9%. Yes, it did pick up, but we did the data was released actually lesser than the consensus, meaning we were anticipating prices of retail sales to come out actually higher, but actually, yes, it did come out positive, but not to the degree that we were anticipating, meaning could investors be losing confidence in what is happening currently at the moment? Now, there are still negotiations on more trade deals between the United States. Remember, once again, the United States of America is the biggest economy in the world in terms of most of the goods. Let's say, for example, BMW, their biggest market is in the United States, Mercedes, and so on and so forth. Now, the data has actually come out negative for Germany. The data has actually come out negative for France, which has just been released less than 30, more or less 30 minutes ago, whereby if you can look at our consumer price index, and then if I do click on this information here, I can read the official report. Okay. So this is the official report that has just been released by France a couple minutes ago. And we'll want to look at the data, look at what this has to mean. Now, over a year ago, let's translate this page to English because I don't read French. Over a year ago, the consumer price index rose by 0.9% in August after 1% in July, according to the provisional estimate made at the end of the month. The slight fall in inflation should be explained by the slowdown in prices of services, particularly those of transport. Conversely, the prices of energy should fall at a slower pace than the previous month, driven by those of petroleum products. Now, remember, oil is usually a very, very key indicator in terms of inflation, because most of these goods and services they do depend on oil. If oil prices are high, it means transportation is going to be higher, meaning the overall prices of goods and services will be picking up. Now, food and tobacco prices should rise at the same rate in July, and manufactured products prices should fall at a slightly faster pace than the previous month. Over 1 month, consumer prices should increase by 0.4% in August of 2025 after 0.2% in July. This further increase in prices should be explained in particular by the seasonal rise in prices of manufactured products after the summer sales. Now, once again, seasonality speaking, it is summer in the European region. We are about to enter into winter. Now, this is the time whereby most of the money is being circulated in the financial markets, because this is the time people are going to take out loans to go spend on vacations. If you want to purchase a property, there's a high likelihood that they will buy a lot of goods and services at this point in time, because everything, the sun is shining, yeah, the money is in circulation, particularly those of clothing. The prices of services and food should rise slightly compared with July. Conversely, the prices of energy should fall back slightly over a month, driven by those of petroleum. Now, this is the entire document, and looking at variations in the consumer price index, we did have highs back in November 2022 at 6.2%. The following month, on February 2023, we did see it pick up to 6.3%, but actually the data has been declining aggressively. And could this be worrying? The only one way to find out. No. Going back to the economic calendar, this is the same graph that we have been seeing declining ever since 2024. And we'll want to look at this data, how it's going to have an effect on the European region. Now, if I can reload my page here, more data has been released for Spain, whereby the data has actually come out lesser than forecast. For the consumer price index, the month-on-month release. Now we do have the harmonized and the consumer price index, both of them coming out lesser than the forecast, but coming out better than the previous number. And if I can go to my charts and I want to look at something that has the euro, let's say for example euro USD, let's see how the charts are pricing in this information. Let me remove this piece of information. So looking at it currently at the moment on the 1 hour, we have been seeing a decline ever since this peak that was formed yesterday on Thursday at exactly 8 p.m. Prices have been declining, particularly on the day the euro against the United States dollar is down negative 0.1%. And we could anticipate these prices moving to the downside if at all the data does come out continually negative at the moment. But looking at the United States dollar, there's a lot of things we are anticipating, especially in terms of interest rate cuts, meaning could be we see the dollar being weaker and the euro also being weaker. Therefore, the prices could be maintained more or less at a similar place. But if I can pick an asset like, let's say, for example, euro against the yen, here you are, darling. Once again, this is consolidating quite aggressively, so the markets are still anticipating for further confirmation of the markets. Now, remember, again, today is the final trading day of the monthly calendar. We don't anticipate a lot of movements. It's a Friday, and the data has already been released. We would want to wait for next week to come about, whereby a new monthly candlestick is going to start, and then we might anticipate pricing either moving to the upper side or to the lower side, depending on the data. But the eurozone is very, very active today. Looking at it once again in the next 35 minutes, we do have an employment change for Germany, which we are anticipating it to come at 10,000. The unemployment rate, we do anticipate it to come at 6.3%, which is equivalent to the previous number. Now, for this data, actually lesser than forecast is good for currency, because the lesser the number of unemployment, it means that the people in the working force is higher, meaning the government is going to pick more taxes, which reflects to higher prices in the long run. We do have data coming in for Italy in the next 39 minutes or so, whereby this is the GDP for the year-on-year second quarter, whereby we do anticipate it to come at exactly 0.4%. The consensus is at 0.4%. The actual data has not yet come out, and we do anticipate if this data comes out higher, it means it's going to have an effect on the prices. Or once again, the euro is going to be very active up until 1500 hours. We also do have data coming in once again for Germany, but this one is going to be the CPI for the consumers. We have seen retail data coming out. Yes, positive compared to last month, but it's actually coming out lesser than the forecast. And this will have an impact. As you can look, we do have three red folders, meaning this is high volatility expected in the marketplace, whereby we do anticipate the numbers to pick up. Whereby the previous number was 2.0%, we are anticipating a 2.1% peak in terms of consumers, and this is a good gauge of inflation in the euro region, especially Germany, looking at it currently from this point of view. Now, in the next 5 hours, 8 minutes, we do have personal consumption expenditures coming in for the United States dollar, whereby this is a good gauge of looking at how people are consuming in the United States of America. Now, if I bring up a short-term description, whereby this is released by the US Bureau of Economic Analysis, this is a month-on-month release, which measures the prices of goods and services purchased by consumers in the US. The PCE index is also the Fed Reserve's in reference month to the same month a year earlier. Now, the core reading excludes the so-called more volatile food and energy. So we are going to have two releases, okay? Now we do have the core and then the data itself, whereby the core reading excludes volatile energy to give a much more accurate measurement of price pressures. Now, a high reading is usually seen as good or bullish for the dollar, while a low reading is seen as bearish for the United States dollar. We do have personal income also coming in out, but I would want to focus on the good trades balance. This is a very good data to be looking at, whereby they look at the difference between imports and export prices, which means that let's say, for example, if a country is exporting more than it's importing, let's say, for example, Japanese yen, which is a net exporter, it means that, okay, the more goods are being sold compared to imports. Looking at Kenya, we do import more than we export. So that has an impact on prices. But I would want to put focus on the Michigan Consumer Sentiment Index. Yes, it's moderate impact expected, which is going to come out in the next 6 hours, 36 minutes at exactly 1700 hours. Now, for consumers, and consumers technically are the best gauge in looking at how the economy is doing. If consumers feel like, okay, the economy is not doing well, then it means that we are anticipating an economic turmoil in the near future. Now, when looking at Michigan, Michigan accounts for almost more or less 2.5% of the total GDP of the United States of America. Now, looking at this data, they're going to ask consumers, how do you feel about business right now? If consumers are like, we don't like it, it means things are not headed in the right direction. Now, the questions cover three broad areas. Personal finances. How do you feel about your personal finances, business conditions, and buying conditions? Now, the data shows a picture of whether or not consumers are willing. Keyword here is willing to spend money. A key factor as consumer spending, once again, is a major drive of the US economy. Remember, the United States of America, they do spend a lot of money. Yeah. So they do need to make a lot of money. If they're spending, it means they are making a lot of money. And if this data comes out lesser than focus, it means that, okay, they're not spending as much, meaning there's not as much money, there's not many dollars circulating in the economy as previously. Now, the University of Michigan survey has proven to be an accurate indicator of the future course of the US economy. Now, whenever you're looking at fundamentals, we do have lagging data and we do have leading data. Let's say, for example, lagging data include unemployment, whereby if someone loses a job today, it will take a bit of time for them to go broke. But there are data which is leading, and this is one of the forward-looking news releases that we as traders anticipate. Okay, now the survey publishes a prelim, mid-month reading, and a final print at the end of the month. A higher reading is usually seen as bullish for the dollar, while a low reading is usually seen as bearish. Now, the day is going to conclude with the update of the commitment of traders, and I would want to look at how institutions have bought into the markets or sold into the markets, especially looking at where the Fed Reserve have come from in terms of we do anticipate the Fed Reserve to lower interest rates. And if I can just pull up a chart of the Fed Watch tool, And this is the data that we are looking at currently at the moment, whereby in the next 19 days, 10 hours to go, we do anticipate there's an 5.1% chance we might see an interest rate cut in the next FOMC meeting. Now, looking at 10th of December, which is going to be the final FOMC meeting, there is a 47.7% chance we might have two interest rate cuts, and this is looking at a probability of 47.7% chance once again that we might see interest rate cuts being taken to 3.75 and 400 basis points. Now, there's a 36.7% chance that we might see interest rate cuts being taken down to between 350 to 375 basis points. Quite interesting, because looking at this piece of information, we do anticipate institutions to start planning it out as early as now. And I would want to look especially at the gold net positionings, whereby gold institutions have bought into the market this week, especially coming from last Friday, whereby we have seen prices of XAU climbing to the upper side. And for those who have been following me on the stream, I did speak about the 3,400 region quite a lot. And looking at it currently at the moment, we are actually trading at 3,407, meaning that the region that we were looking at ever since last week on the morning market calls, prices have broken to the upper side. We are currently trading above 3,400, which we did identify as a key psychological level. Looking at how prices have been trending to the upper side, the markets are clearly making higher highs, higher lows, especially coming from this boundary test. And this was looking at this specific candlestick, this was when Jerome Powell did have his speech, and then we did see prices aggressively pushed to the upper side, broke the most recent region of resistance, came back down to retest that region, now being support. Prices continued moving further to the upper side. We have just started a segment on the morning market call where I would want you to engage with me, which are some of the assets that you would want for us to look at. I have so many assets on my watch list, and it's not possible for me to look at each and every one of them. But I want you to engage with me. Which assets do you want me to look at? Looking at the dollar index yesterday, we did identify that if we do close below there's a region, there's a high likelihood prices will continue moving further to the downside. And looking at it currently at the moment, the dollar index is showing weakness in the United States of America, meaning potentially we might see lower prices in the near future. But equities have continued to do well, whereby the S&P 500 did make all-time highs yesterday at exactly 10 p.m. This was after London Open, whereby we did hit a high of 6,511.7. Quite interesting, looking at the S&P 500, which is usually the benchmark of the United States economy. Now, looking at the Nasdaq, which is a tech heavy, once again we did form a high, but came to a region of resistance that we were identifying. Relatively equal highs being formed at around 23,000. This was a region once again that we were identifying uh, ever since last week at 23,734 region. We did break out of this consolidation. Currently, the markets are retracing. Once again, it's the final trading day of the monthly candlestick. We don't anticipate a lot of data. We don't anticipate a lot of volatility in the markets, because the markets will be waiting for the next monthly candlestick to open. Looking at the United States 30, which is the Dow Jones, we were identifying this a region of relatively equal highs yesterday, whereby the markets did break to the downside, came back, retested, and currently we are in this region. You can see the size of the candlesticks, they are quite relatively small, meaning the markets are waiting for the next trigger, which could come next week as we await the highly anticipated non-farm payrolls, which is going to be next week, Friday, whereby we will want to see how the economy of the United States have either added or lost jobs in the previous month. Now, looking at the Russell, entered into a period of consolidation once again, and this is anticipated because once again, in the final trading of the monthly candlestick, we don't anticipate a lot of volatility. Now, looking at the FTSE, which is the UK 100, we did come back. We are in a period of consolidation. This region is still holding. If we do get this candlestick closing below this region, this means that prices could continue moving to this region of support that we form on 18th of August of this month. Once again, we as traders do react to prices. I would want to go over to your questions or any other charts that you would want me to look at. I'll be glad to do so. So oil prices, very good, very good. As we have seen data on coming out for Europe, it's come out actually very high, whereby we have seen oil prices, energy prices, some of them going up to 30% compared to previous month, meaning we might anticipate oil prices to continue moving to the upper side as a result of that data. Remember, Europeans, they do consume a lot of energy. Yeah? They do consume a lot of energy. Now, looking at Brent oil, could this have an impact on the prices? Yes, if the data continues to persist. Looking at import prices. This is Germany only. This was for Germany only. Yeah? We did see energy pick up quite aggressively. Crude oil was up 22.7, hard oil 17.9, mineral oil products 12.9%, and okay, where was that data? Okay, this is the data here. Electricity did cost actually 37% more. Now, if you look at this information, if there is continuation of energy prices continuing to the side, we do anticipate it to have an impact on Brent. Now, this is UK oil. Brent oil is UK oil, but I would also want to look at natural gas and so on and so forth. Seasonality speaking, in the near future, we do anticipate oil prices to pick up, especially during winter. If winter does approach, we might anticipate prices of oil continuing further to the upper side. Now, for oil to be profitably mined in new wells, it has to be trading above the $60 a barrel. And currently, at the moment, we are trading at $67 a barrel. And this is quite interesting because it shows us that, okay, the energy prices are headed in the right direction. But remember, once again, oil prices are heavily tied to inflation, meaning high oil prices usually tend to reflect on prices of inflation. Uh, how people trade oil in Nairobi. The prices of oil that you are seeing here is the same prices someone is seeing in the United States. So where you're trading doesn't matter. Hello, Basweji, Babu Block. Where's the link for the NFP event at Nairobi Garage? Do we have an event for NFP at the Nairobi Garage? I'll look into that, Babu. Let's look at EU. So Euro what? Shall we look at Euro USD? Currently at the moment on the 1 hour we are consolidating. So looking at euro dollar, we are currently consolidating. Once again, this is the final trading day of the monthly candlestick, and we don't anticipate a lot of data. Looking at this consolidation that we are facing currently at the moment, I would want to wait for a clear breakout and retest, either to the upper side or to the lower side. Currently at the moment, I'm going to remain neutral. So as a promo for today, follow our HFM Africa YouTube channel and turn on your notification for the trade gold drive bold. This is the day someone is going to walk away with that Mercedes award ceremony shall be streamed on 3rd September. Oh, it's not today. At exactly 9 p.m. Now join us for the 5th September event from 2:30 to 4:30 for this month's highly anticipated NFP. Now click the link in the bio to register. We have an event tailored for beginners. Join us for the Traders Clinic from the 15th to 17th of September, 2 to 5 p.m. Both events are at Nairobi Garage, Spring Valley. Kindly register via the link in our bio. Nsanzimana 814 says hi. Hi too. Hello. Are there any more questions on IG? Sorry, I missed out on the goal chat. This session will be uploaded. It will be uploaded on the YouTube channel. But once again, gold is moving to the upper side. The train is to the upper side. The buyers are in control, anticipating that if the data does come out negative continually for the United States dollar, anticipating that this could be institutions pricing in already the interest rate cut before the 17th. Is it going to be the 17th of September? I do believe so, whereby we do anticipate the Fed Reserve to cut interest rates. That is going to actually autumn. Yeah, yeah, yeah. Yeah, 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 true, 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 true. Yeah, it makes sense out. It does make sense, but it's okay. What can we do? Um, we have to keep the music on. Huh? We have to keep the music on. Kindly follow us on all of our socials. I shall see you on Monday, whereby we shall be digesting the commitment of trader data more. It's going to be interesting. Have a blessed week. Have a blessed weekend. Technically speaking, stay safe. Once again, risk management is very crucial as a trader. You have to wake up to an account tomorrow, okay? You have to wake up to an account. That's going to be it for me. Cheers. Adios.